Welcome to Edge Industry Review Fireside Chat. I'm Jim Davis, your host and editor of Edge Industry Review. Today we're talking about the data center market with a company that's been making its mark outside of the traditional regions such as San Jose, California, and Ashburn, Virginia. That company is DataBank. The company has been executing on a strategy to help enterprise and hyperscale customers by scaling its colocation and edge infrastructure footprint. In March, DataBank closed its acquisition of 4 existing Houston, Texas area data centers from CyrusOne for $670 million. That is some bank. That transaction means the company is serving over 30 metro markets from 60 plus data centers in DataBank's US portfolio. We're talking today with Raul Martynek, the company's CEO. Welcome. Thanks for joining us.
Thanks, Jim. Thanks for having me.
Well, so I don't know if I always think of Houston as an edge data center market. Maybe you can describe the company's strategy and how you fit into this edge data center market continuum. Let's call it that.
Sounds good. Yeah, no, that's a great question. And, as you know, the edge is this word that everyone uses. It's hard to define. It reminds me of like VoIP from, 15 years ago, or cloud from about 10 years ago, right? And then all of a sudden, it starts to crystallize. Look, let me tell you, my view of the marketplace, and then that kind of drives our strategy. Ultimately, obviously, this is all about kind of internet infrastructure, right? And kind of the evolution of the internet, right? And if you obviously step back and think about over the last 20 years, how this has evolved, ultimately, we've gotten to this point where, from an application perspective, most customers, were thinking about it from a relatively centralized location. If you look at AWS, right, it's got US East in Ashburn, it's got US Central in Columbus, it's got US West in Oregon. And if you think about how big that business is, the vast majority of kind of the data, the processing, the delivery is coming out of those markets, right? And ultimately, what we believe is that kind of what edge signifies from an internet infrastructure and topology perspective is the pendulum swinging back towards a more decentralized model than a centralized model, which we believe is exemplified by the cloud, right? I like to say that, 20 years ago, and I've been in the space for, since the mid 90s, since kind of the dial-up era, right? 20 years ago, you'd go into any office in America, there was a data center. It was called the computer room, right? And ultimately, all that infrastructure moved out of offices and homes and kind of migrated to a smaller subset of public cloud data centers, obviously, as I just described, in kind of a small number of geographic regions, and third-party data centers. And what we think edge is about is kind of that pendulum swinging back towards a more decentralized approach. When you take a market like Houston, it's the 5th largest city in America. It's the 4th largest metro. Ultimately, to us, edge is about geography. Edge is about population centers. So we couldn't not be in Houston, and we were just looking for the right opportunity and the right platform to enter that market.
So how many other providers are in the market right now in Houston?
In the Houston market? There's a handful. This space from a competitive perspective, it's always going to be competitive, right? Ultimately, every market, as you mentioned, we're in about 30 U.S. markets, ranging from Ashburn to, Kansas City or Waco, Texas, right? Which I would consider more of a tier 3 market, but predominantly in kind of tier 1 or tier 2 markets. All these markets have, different competitive dynamics. And we don't think that's going to change. And we think that, this industry will always be very competitive. Ultimately, over time, we do think there will be kind of, continued consolidation. When you look at, wireless or fiber or cable or wireline, those are all sectors when you trace back to where they started. They had a lot of players, and then it kind of consolidated because obviously the economies of scale. But ultimately, what we look for in a market is, what we perceive to be a good set of assets. In this case, obviously, it was the CyrusOne assets. We think, they were high quality, well built, very long-lived type of assets. We look for, good customers and good customer relationships and contracts. And then we look for a market that, again, we have a view on that we say, you know what, we think there's going to be growth there that will come predominantly from, a couple buckets, right? Number one, still there's a lot of data center growth that's being driven by kind of outsourcing, right? There's still enterprises outsourcing workloads to third-party data centers. That tends to happen kind of on a local basis. If you're headquartered in Houston, you probably will outsource to Houston first, at least for your primary spot. Then number two, there's an interconnect component that creates growth in the Houston market, along with about 20 of our other markets. We have these highly interconnected interexchange points. As you probably know, we acquired about a year and a half ago a portfolio of assets from zColo. A lot of those assets were kind of core hubs for Zayo networks. So there was an ecosystem of kind of network providers and people that wanted access to networks. And we love those type of ecosystems, and that tends to grow because bandwidth grows. So when bandwidth grows, you need more space, more power, more routers, more switching, more firewalls, things like that. And then the third component, which is what we're talking about, is edge, right? And ultimately, from an edge perspective, we think we're kind of where we were in 2000, we call it 10 years ago with public cloud. I mean, you go look back and see where public cloud was in 2012. And ultimately it was so small that Amazon wouldn't even report it as an operating segment separately, right? Google hadn't entered the market yet, and Microsoft was still fumbling around, right? And that, if you remember, that's when SoftLayer was around, right? They were the big kahuna. Joyent, GoGrid, Voxel, which was a company I was with. So as I like to call it back then, the cloud wars were just starting. No one would have believed how big public cloud is today, where we were 10 years ago. We think edge is in that same state of development, that 10 years from now, kind of edge will be as dominant as public cloud was in the 2010 period.
Kind of funny that you mentioned the background of cloud. There were certainly lots of wars about what is a cloud, how to define it.
Correct.
If I'm not mistaken, Dell tried to trademark the term.
Yeah.
So today, what does edge mean or not mean to enterprise customers? Does it resonate with buyers at all?
Yeah, no, it does. It does, but it's as I just, as we said, it's such a amorphous topic. Edge means a lot of things to a lot of different people, depending where in the ecosystem you live, right? So we don't think of it as a monolithic edge. We think of it as a multifaceted set of edges, so to speak, depending on the customer segment and what particular problem they're trying to solve. So a couple examples, right? So we there's a term we use, and other people use it, the hyperscale edge, right? So in that scenario, that's really is a public cloud dynamic. As I mentioned, the large players are in a relatively small number of locations, but now they're in the process of disaggregating their footprint, right? So obviously, if you read from a public perspective, right, Amazon announcing local zones, that's edge, right? They didn't call it edge zones, but that's what that is, right? That is a compute storage type of product or a network product in a geographic region to allow that infrastructure to be very close to the population center, right? Azure, Microsoft has come off obviously with Azure Edge Zones. Google has less of an articulated strategy around that, but it's clear to us that that hyperscale edge is going to evolve and that these platforms will look very different in 5 years and 10 years than the way they look today. Then you got, the mobile edge, right? In our case, we think 5G is going to be a significantly, revolutionary technology. Just to step back a second, DataBank, as maybe some of the readers know, we're part of this group of companies that are funded and are lead investor in DigitalBridge. DigitalBridge is, probably the world's leading internet infrastructure investor, and they've made over $42 billion worth of investments in what we consider the three links of the infrastructure chain: cell towers and small cells, fiber and data centers. So the reason I bring that up is it kind of gives us this 360-degree view of the space that we don't think a lot of folks have. And when it comes to the mobile edge, we think that the evolution of 5G and specifically mobile edge computing will also create kind of this, these new locations that have a lot of strategic value to create, ultra low latency type of applications. And that's another type of edge, right? So there's different edges that happen depending on the players and depending on the workload and depending on the use case that they're trying to solve for.
So do you see yourselves as staying more in this regional edge data center type market, or are you going to play at what the LF Edge group calls the access edge, the cell phone towers, et cetera? Will you be in that market as well, or possibly, for instance, sell micro data centers, an
Yep.
AWS Outpost type offering?
Yep.
How
Yeah.
edgy do you get?
Yeah, that's another great question, Jim. And this is another kind of confusing part about the edge, right? Is that at least, when edge really came in vogue, right? I think the main association with edge was this modular data center, right? This idea of a data center at the base of a cell tower, right? Because it's one hop away from the thing, right? And ultimately, we don't think about edge from that perspective, right? We think edge has, that an edge location can exist almost anywhere. It can exist in Chicago or New York, right? It can also exist in, as I mentioned, Waco or San Diego or Las Vegas. And we think an edge data center can either be a traditional data center like the ones that DataBank builds, and we also think it can be a modular data center. 2 years ago, we made an investment in a company called Edge Presence, which is a modular data center business, right? It's based in Jacksonville, Florida. We've been working with the company over the last 18 months, identifying very specific use cases that I like to say are highly geographically specific, right? At the end of the day, if you step back and you think about what we deliver as a data center operator, it's a platform to do a certain type of business, right? So what do customers want from a data center operator? They want uptime, they want security, they want compliance, they want carrier neutrality, they want interconnection, and that can happen in a 200,000 square foot data center or in a 15, cabinet pod. And ultimately, we deliver that same experience regardless of that form factor, because that's ultimately what our customer wants to consume from us or purchase from us. So we've deployed about half a dozen of these modules in a select number of markets to support a very specific, all I will say is network use case. And we think that makes a lot of sense. We see a lot of players dropping these things in locations that when you kind of interrogate it, why are you there and why would a customer want to be there, that there isn't really a lot behind it. It's more, hey, here it is and it's novel and it's a container. But we do think that
a little bit more proof of concept than anything.
Yeah, we think that those modular solutions will become more in the years to come, and ultimately it's because of, back to what I said about every office having a data center, right? Is that ultimately having this kind of key infrastructure that's going to support some type of digital experience or deliver some type of digital service. That infrastructure is going to have to be really, really proximate to where that service needs to deliver. That's what drives the modular. Otherwise, guess what? You can have it, which we see mainly today where the market is that most edge workloads are going into traditional data centers. But again, we see that kind of fanning out and kind of these overlapping circles happening in the years ahead.
Well, so while we're on the topic of edge data centers and specifically kind of the containerized or modular data centers, there's a lot of interesting challenges in terms of balancing location, power supply for all of the different services. Can you talk about any sustainability initiatives you have in process? Maybe you could share some thoughts on some recent activity from the SEC about reporting standards for environmental and sustainability initiatives, carbon footprint reporting. Kind of wondering where you stand on all of that.
Yeah, no, it's obviously becoming increasingly important, and we actually see more of this being driven by our investor base, right? DataBank, as I mentioned, Digital Bridge, they're a public REIT, public real estate investment trust. We also have other major investors like Allstate, CBRE Caledon, Nuveen, which is the TIA-CREF Teachers Pension Fund. And what we see across the board is that investors have realized that ESG needs to be part of kind of a go forward business approach. So we're trying to be as proactive. Digital Bridge has a mandate for all its portfolio companies to be carbon neutral by 2030. Where we're really focusing our efforts at DataBank, being a data center operator, obviously, is the consumption of power, right? I mean, it's clear that as we continue to consume technology and that technology finds its way into data centers, that the industry has to solve that problem and has to have a long-term sustainable way to be able to continue to grow and not contribute to kind of climate change and continued carbonization of the economy. So our focus on the environmental side is twofold. Number one, aligning ourselves so that we have a roadmap to 100% renewable energy. We've made a huge amount of strides over the last 3 or 4 years. What's great is that kind of same investor philosophy is happening in all different industries, including energy and transportation. So what we see is that there's more and more options to consume renewable energy at prices that are as good or better than carbon-based alternatives. So we're already at about 50% of our power consumption is 100% renewable. And then the second area is water use, right? Everyone in our space knows the term PUE, but I think in 2 years, everyone's going to know what the term WUE is, which is water utilization effectiveness, right? So it's the same concept, right? How on a per, how much water are you consuming on a per megawatt basis, and how do you take that down to a level that, is either zero or extremely efficient? So those are the two main areas from a environmental perspective that the company's focused on, and our parent Digital Bridge with the entire Digital Bridge ecosystem.
Well, that's definitely good to hear, because if we don't have a planet to live on, there's not much market for data center services or anything else, right? Exactly. Well, so speaking of the future, what market verticals or key trends do you see driving growth this year? And will that growth turn into any further expansion? Could that expansion lead into some expansion into other markets like Canada, or just further out from those regional markets you're in?
So look, obviously DataBank over the last 5 years, Digital Bridge, we acquired the company in 2016. At the time, it was 6 data centers in 3 markets. And in the last 5.5 years, we've grown it to be the largest geographic footprint in North America, in the U.S., right? We operate, as you mentioned, over 60 data centers in 27 U.S. markets. We believe, as I said, Edge is about geography. So we want to have a large canvas of data centers and data center capacity across these different regions. Houston, we just talked about. And what we're seeing from a demand perspective is, where 2-3 years ago, a customer would say to a data center operator, okay, I have a large scale app. I want to deploy it on a nationwide basis. I need to be in Ashburn, Dallas or Chicago, and Santa Clara, right? East, Central, West. That was kind of the best practice type of approach to delivering applications. And what we're seeing today is customers are coming to us and saying, we don't want to be in 3 locations. We want to be in 8 or 10 or 12. And it's because they're thinking the same way we're thinking, which is they want to decentralize their application, both for scale, for performance, and ultimately for the ability to deliver a better product to their end user. And we think that extensive geography will allow us to support that customer growth. So we're actively building in 10 markets right now. We have almost a $500 million capital budget this year, and we are actively building over 141 megawatts of in-place UPS and expansion capacity across 10 markets to support what we perceive is this kind of wave of edge demand that's going to happen over the next couple of years.
Well, that's certainly good news. A lot of growth coming this year. So, Raul, with that, I'll say thank you for joining us, and look forward to talking to you and hearing more from you.
Thanks, Jim. Thanks for having me today.